Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. Asian stocks trade lower as the Bank of Japan and the Federal Reserve both kick off their two-day meetings. Data dependence. ECB watchers get the latest GDP readings today. We'll bring you the numbers from Germany, France, Italy and Spain. And unrest in Caracas. Thousands of Venezuelans protest what they say is a fraudulent election win for Nicolas Maduro. A very good morning. Welcome to Tuesday. Now, as we edge towards those decisions from the BOJ, the Fed and the BOE, potentially a hike, a hold and a cut, and we get more and more of these earnings, let us check in on the futures picture. You've got futures pointing in opposite directions, really, on both sides of the pond. Yesterday, we saw that trade, the rotation from big to small caps, actually unwinding somewhat in the US session. But if we flip over to the cross-asset picture, you've got the 10-year US Treasury yield pretty much where we left it yesterday morning, as we look ahead to a bit of guidance perhaps from the Fed Chair Jerome Powell on the rate path ahead. But euro dollar at 108 as we await that Eurozone data, the yen at 154 as we look ahead to the BOJ decision, and Brent back under $80 a barrel on these concerns about softening demand. So $79.49 is where we trade at the moment. But let's get over to Avril Hong. She's in Singapore on standby for us. Avril, what's happening where you are?
Well, we have the BOJ's two-day policy meeting well underway. A lot of scrutiny on the governor, Kazuo Ueda, and ahead of all this decision-making, we are already hearing some analysts, despite the market consensus being one of a hawkish BOJ, saying that markets might be running ahead of themselves in expecting a BOJ that's going to hike rates and also come through with quantitative tightening. Regardless, we're going to be watching out for its reduction of quantitative or reduction of bond purchases, that QE plan. Most see it happening over 1 to 2 years. Our colleagues in the newsroom have been taking a closer look at the data, and they see this coming off from the 7 to 10 years. That's because the BOJ has most of its holdings concentrated in that duration. We're seeing the yen losing ground ahead of that, perhaps some recalibration of what's to come from the BOJ tomorrow. Japanese bonds catching a slight bid. Let's flip the board and take a look at what's happening in equities. It is a lot of risk off, investors choosing to take money off the table ahead of these, central bank decisions, tech earnings, China, Australia data, and then later in the week, we're also going to get those non-farm payrolls, a lot that could shape markets. Nikkei is down. Also worth highlighting that as we see this bleed in China and Hong Kong stocks, China has also said that it's going to start publishing global daily stock flow, so making the market there a bit more opaque, less attractive to offshore investors. Let's flip the board, because the other question we've been mulling is, can Japanese equities take this QT or this tightening from the BOJ? And for that, our colleague Mark Cranfield has been looking back in the history books. 2006 to 2008 is the period he's been looking at. And as rates went up, the topics also did climb. So maybe that bodes well for Japanese equities going forward.
All right, really interesting to see what that equity impact could be of the BOJ decision. Avril Hong in Singapore, we thank you as we await the outcome of that BOJ meeting. Now, let's get back to Europe, because this week a barrage of euro area economic data will deliver crucial information for the European Central Bank as officials look for signals on whether to resume rate cuts in September. Let's bring in Bloomberg MLive strategist Mark Cranfield for more. Mark, we had this June cut. It seems the longer they leave it, surely the more June looks like a policy error. So as we look ahead to this European GDP data later, how could it change the outlook for the rate path from the ECB?
Hi, Lizzie. Well, investors are probably going to look at the German GDP more than anything else. It's clearly been the country that the European Central Bank is most concerned about. Germany is such an important part of the whole picture, and obviously they've not been performing that well. So what investors will be looking for is for the German economy to at least be showing signs of improvement in the second quarter. If we get that, then the ECB's idea that they can probably cut once more in September but then hold rates for a while, that would kind of make sense. If we see another poor performance from Germany in the second quarter, it really will cast doubts on what the ECB is looking at, and they may have to be a lot more dovish than they were sounding as they most recently met. So really that's the key. France is also out for GDP as well, but of course that's pre-Olympics data, so some people won't take that too seriously. They'll be more interested in how the outlook for the whole of the quarter goes after the Olympic Games. But Germany is the key here. And another poor performance here, and really the ECB will have to reconsider whether they have to do 2 rate cuts this year or just 1. That's certainly what it comes down to.
Which certainly reflects the ECB speak of late, that uncertainty over how many more cuts there'll be this year. But Mark, I also just want to ask you about the BOJ. Avel was previewing it for us. What happens to the yen if we don't get the hike that is expected? Seeing a lot of volatility around this 2-day meeting.
If you don't get a rate hike at all, I think we'll be talking about dollar yen at the highest levels we've seen all year. That would really be something that the market isn't expecting at all. You can see how the traders have reacted in previous occasions when they've been disappointed by the Bank of Japan. They've bought dollars aggressively and sold the yen. We saw that especially in June. That's when we got close to 162 and we needed intervention from the Japanese authorities to calm everybody down. Well, going into this meeting, people have been trimming their yen position. So we go in a much more neutral stance here because people do expect the Bank of Japan to step up and at least raise interest rates slightly and probably reduce bond buying, as Avra was saying earlier. Now, if they don't come through with both of those, that's going to be a pretty negative signal for the Japanese currency. And you can imagine it will be going up pretty fast, especially as the press conference, which usually follows the Bank of Japan's statement, typically Mr. Ueda is pretty neutral, sometimes even leading a bit dovish when he actually speaks in those press conferences. So there's not going to be much help from the yen there. It's really all down to the statement. It needs to have some hawkish forward guidance. They need to achieve these 2 points of a hike and a bond purchasing cut. If they don't get that, the yen really is going to be in trouble by the end of the week.
All right. Bloomberg M Live strategist Mark Cranfield looking ahead to that BOJ decision and the commentary from Governor Ueda. Now I want to go to Venezuela. Thousands of Venezuelans protesting in the capital after President Nicolas Maduro claimed victory in Sunday's vote. Venezuela's opposition campaign, though, says that it can prove Edmundo Gonzalez won the election. And this comes after the country's public prosecutor named opposition leader Maria Corina Machado a suspect in an alleged plot to sabotage the election.
Es un milagro. Es un milagro.
Today, I want to tell all Venezuelans in the country and abroad, to all the Democrats of the world, we now have proof of the truth of what happened yesterday in Venezuela.
Well, let's get to Bloomberg senior editor Bill Ferries for more details. Bill, what do we know about this alleged plot?
Well, opposition leader there, Maria Corina Machado, has said that they have received detailed vote tabulations for about 70% of the polling stations across the country. And that data shows that their candidate, Edmundo Gonzalez, got more than twice as many votes as President Nicolas Maduro. We have not seen that data publicly yet. Machado has called for what she called citizen assemblies to take place later today in Venezuela at 11 a.m. We may get some more information there. But we've also seen a number of traditional Venezuelan allies not immediately stepping up to congratulate Nicolas Maduro on this contested election win. Countries like Brazil, Mexico, Colombia, they are still calling for more transparency in the results. And the Brazilian president is expected to have a call later Tuesday with President Joe Biden in the U.S. The U.S. has also called into question the validity of the results announced by the Electoral Center in Venezuela.
OK, so that's some of the international response. What about the domestic response, seeing scenes of protest in the streets?
Yeah, we've seen thousands of people taking to the streets, and unlike previous elections, these protests seem to be taking place outside of Caracas, which is often where the opposition has had a stronghold. So they're taking place in more rural areas, some of the smaller cities, and that is probably a warning sign to the Maduro regime as well about how these protests could catch fire and continue to spread in the coming days. We don't really know where this situation is going. It's quite tense. And as you mentioned at the top, the government has actually accused the opposition of trying to derail and hack into the electoral systems. They have not called for the arrest of Machado, but that's something I think people will be watching for in the coming hours and days.
All right, Bill Ferries, our senior editor, we thank you for the latest from Caracas. Now, let's get to what else we have on the docket today. At 10 a.m. UK time, as I mentioned, we've got the euro area GDP. It's expected to grow at 0.2%. It'll be the second straight quarter of positive growth. Then at 3 p.m. London time, we have the US JOLTS data. The consensus is for a drop from just over 8 million to slightly lower, but still just over 8 million. And then we will also be on the lookout, of course, for earnings from BP, Diageo, Airbus and L'Oreal. L'Oreal perhaps could be more insulated from this slowdown in China, given its scale, its diverse range of products. That's what analysts are saying as we look ahead to those earnings. But we'll bring you all of them when they cross. And we'll also be speaking with Diageo's Deborah Crew at 8 a.m. London time. You can get a roundup of the stories that you need to know to get your day going in today's edition of Daybreak. And today they're leading on the news that Samsung has won a long-awaited approval from NVIDIA for a version of its high-bandwidth memory chips. They're also looking ahead to the Fed and BOJ decisions and that euro area GDP growth figures. But if you would like to take a read of that newsletter, just go to DAYB Go on your terminal. Coming up on the programme, we're going to speak exclusively to the Standard Chartered CEO Bill Winters about the lender's earnings beat and share buyback. That's coming up at 6:30 a.m. UK time. We're also going to bring you the latest from the Middle East as far-right protesters have stormed 2 Israeli army bases after soldiers were arrested on abuse allegations. That's next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. It's 6:15 a.m. in London. Just a quick recap of the earnings out of Standard Chartered, as we're going to be speaking to the CEO, Bill Winters, later on in the programme. You have seen the shares rising more than 3% in Hong Kong, up to 2.7% the last time I checked in Hong Kong. This is on the second quarter pre-tax profit beat, driven by its wealth business, and also the announcement that they're going to repurchase a record $1.5 billion in buybacks as they look to return a total of $5 billion to shareholders by 2026. Could these results mean they're a bit more ambitious about that buyback? We'll be asking Bill Winters, the Standard Chartered CEO, coming up for an exclusive interview on the programme. But let's get back to the situation in the Middle East. We have seen protesters and far-right politicians from Benjamin Netanyahu's coalition storming 2 Israeli army bases as tensions soared after the arrests of soldiers accused of abusing a Palestinian prisoner. It comes as the US and others scramble to prevent Israel and Hezbollah's conflict turning into a full-blown war. And for more, we can get analysis from Bloomberg's Jemana Basetchi, who joins us from Dubai. Jemana, just tell us what we know about these protests and what caused them.
Well, many local Israeli outlets are calling this 12 hours of chaos. What we know is that many demonstrators and far-right lawmakers from within Netanyahu's coalition stormed 2 of these military bases overnight. They were protesting against the arrest of soldiers at one of the bases where suspected Hamas fighters who carried out the October 7 attacks are being held. The Israeli military police say that they raided the base following allegations that an inmate was subject to serious abuse. And this is, of course, the same base where many Palestinian political prisoners are being held and has been subject to Supreme Court challenges by human rights watchdogs alleging intolerable conditions. And later in the evening, the riot spread to another military base as well, where other soldiers were also being detained. Now, even though there were no immediate reports of arrest or injuries, what it does show is just further upheaval domestically. You even had had the likes of the National Security Minister, Ben Gvir, put out a tweet saying, and this is a quote, "Take your hands off the reservists," and does just another illustration of how Netanyahu's own coalition is very much divided and split, even over something involving how its own political prisoners are treated. And this is coming at a time when you would think that the security officials would be meeting to discuss the potential reprisal over the Golan Heights attack over the weekend.
Meanwhile, you've got the diplomatic efforts continuing to avoid this all-out war on Israel's northern border. What's the latest on that?
Well, the latest is that Lebanon, the country as a whole, has been preparing for a reprisal in response to those Golan Heights attacks, with Israel and the U.S. pointing their finger at Hezbollah denying responsibility. And yet the country is preparing itself for a potential reprisal. Many diplomatic efforts have gone through in an attempt to convince the Israeli side to keep it limited. And indeed, many Israeli outlets are now reporting that if there is a response, it will be limited, quote, but significant. On the back of that, we have seen many flights out of Beirut airport delayed or postponed. Some embassies like Germany and Australia advising their citizens to leave the country. Next 24 hours are going to be crucial. But it is worth pointing out that Anthony Blinken, the U.S. Secretary of State, said he does not want to see the conflict escalate. You have the European Foreign Affairs Chief, Joseph Borrell, calling on all parties to exercise restraint. And even the Lebanese foreign minister gave an interview to a local station saying Israel will escalate in a limited way and Hezbollah will respond in a limited way. These are the assurances we've received. So the diplomatic channels are working hard to keep this a contained response.
And Jemana, you touched on the business impact, airlines suspending some flights. How are the markets reacting?
Well, what you've seen up until the weekend is actually an outperformance of Israeli assets. Up until the Golan Heights attack, what you saw was actually a huge outperformance for some of the local bonds, the dollar bonds within Israel was some of the best performing assets worldwide. The Israeli shekel, you started to see somewhat of a stabilization, and then the Golan Heights attack happened. Instantaneously, you saw the shekel drop about 1.5%, even though some stabilization came through over the course of the day yesterday when it became apparent that Israel was not yet ready to launch an all-out offensive. The currency and the bonds continue to be a very strong gauge for how investors are feeling about a risk in the region. Not being manifested in oil, interestingly, which we're keeping a close eye on, continues to break through $80 to the downside, completely brushing off concerns about what is happening in the risk geopolitically. But as of yet, for the month of July, even with the gyrations of the last couple of days, Israeli assets have done quite well. And that also, Lizzie, is an anticipation of more optimism around this potential Gaza ceasefire deal that we've been talking about.
All right, Bloomberg's Jemana Basecci in Dubai. As you say, Brent trading at $79.49 a barrel, so weak at 0.4%. We thank you. Now, coming up on the programme, Standard Chartered has expanded its multi-billion-dollar share buyback programme. We're going to dig into those earnings with the CEO, Bill Winters. You don't want to miss our exclusive interview with Bill in just 10 minutes' time. This is Bloomberg.
There is a lot of new stuff to build. And I think even if the progress on the foundation models kind of stopped now, which I don't think it will, I think we'd have like 5 years of product innovation for the industry to basically figure out how to most effectively use all the stuff that's gotten built so far. But I actually just think the kind of foundation models and the progress on the fundamental research is accelerating. So that it's a pretty wild time. I don't think that there's just going to be like one AI model, right? I mean, this is something that some of the other companies in the industry, they're like, it's like they're building like one central agent, and yeah, we'll have the Meta AI assistant that you can use, but a lot of our vision is that we want to empower all the people who use our products to basically create agents for themselves. So whether that's all the many millions of creators that are on the platform, or hundreds of millions of small businesses.
So that was the Meta CEO Mark Zuckerberg speaking in a fireside chat to the Nvidia CEO Jensen Huang. And Meta, of course, reports its results tomorrow. We're also expecting results from Microsoft, Apple and Amazon. Together, I think the total of them is about $10 trillion. And we can also look ahead to all of the other earnings that we're getting out this week. Plenty of big oil to come as well. But let's go to some of the other stories making news this morning. The US Treasury has reduced its estimate for federal borrowing for the current quarter and projected a decline in the government's cash buffer towards the end of the year. It now estimates $740 billion in net borrowing between July and September, down from a previous forecast of $847 billion. The estimate comes just ahead of a possible fresh fight over the debt limit. Elsewhere, energy trader Vitol Group paid a record dividend of $6.5 billion last year after Russia's invasion of Ukraine delivered a profit boom. The payout represents an average of $14 million for each of the 450 employees who own the company. Bloomberg calculates that Vitol has distributed more than $25 billion to its partners over the past 15 years. And to Asia now, where Singapore's Temasek is planning to invest $30 billion in the US market over the next 5 years. The state-owned fund told Bloomberg it's also looking to put money into AI-related firms as well as semiconductors and infrastructure. Temasek's investments in the Americas surpassed China this year for the first time in at least a decade. Now, let's check in on these markets. You are seeing futures pointing higher in Europe, higher nearly 0.2% on the Euro Stoxx 50 futures. But in the US, as we look ahead to the Wall Street Open, futures pointing ever so slightly lower. You did see big tech climbing yesterday, so a bit of that big to small rotation unwinding. But if we look also at the cross-asset picture, you've got the 10-year US Treasury yield there at 4.18%, so higher a basis point currently. You did basically not see it budge since yesterday, and we're going to wait for more signals perhaps from the Fed Chair Jerome Powell at the Fed meeting on the rate path ahead tomorrow. The yen is at a 1.54 handle there as we look towards the BOJ decision. Euro dollar at a 108 handle as we await that eco data out of the Eurozone. And Brent, as Jemana says, is just below the $80 a barrel level, weaker 0.4% because of these concerns about softening demand. But coming up on the programme, we're going to be speaking to the CEO of Standard Chartered, Bill Winters, to get through his results. They have expanded their multi-billion-dollar share buyback programme, and we're going to dig into all of those earnings with Bill exclusively in a conversation next. So stay with us. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. Asian stocks trade lower as the Bank of Japan and the Federal Reserve kick off their two-day meetings. Data dependence. ECB watchers get the latest GDP readings today. We'll bring you the numbers from Germany, France, Italy and Spain. And Standard Chartered announces a buyback after beating on profit. Our exclusive interview with CEO Bill Winters is coming up shortly. Well, we just have some breaking data out of France, the GDP numbers for the second quarter, and it is a beat. 0.3% growth. The expectation was for 0.2% growth. It's up from the previous quarter where you had 0.2% growth again. And of course, this feeds into the picture for the ECB as it looks towards that September cut decision. Expectations had been for a cut. Investors were pricing a 90% probability of a move. But of course, they're going to have to feed in all the other data that we're going to get as well from Spain, Germany, Italy, the euro area, July CPI as well for Spain and Germany later today. Euro dollar there at 108, so barely budging off the back of this. But let's take a broader look at the markets as well as we edge towards those central bank decisions. You've got futures pointing lower stateside, 0.2% for Nasdaq futures, but actually higher for Euro Stoxx 50 futures, higher 0.1%. If we look at the cross-asset picture as well, the 10-year US Treasury yield is higher a basis point at 4.18%, barely budging since yesterday, but we're going to look ahead to signals from Jay Powell on the rate path tomorrow. The yen is at 154 per dollar, euro dollar, as I say, barely budging off that data at 108, and Brent under $80 a barrel now amid these concerns on softening demand. But let's get to the earnings story. Standard Chartered shares higher in Hong Kong after the London-based bank said that it would ramp up its multi-billion-dollar share buyback programme. This as it reports a beat on second quarter pre-tax profits driven by its wealth business. And I'm pleased to say that we're joined now by the CEO of Standard Chartered, Bill Winters. Welcome back to the programme, Bill.
Morning, Lizzie.
Let's start with that buyback. $1.5 billion, a plan to return at least $5 billion to investors by 2026. Is there a chance you could go beyond that target now that you've got results like these?
Yeah, we set a 3-year target of an excess of $5 billion. We've done $2.7 billion in the first year so far. So, yeah, if we continue to perform well, what we've said to shareholders is we've got a strategy. We're pursuing the strategy. It's working quite well. Earnings are strong. We're managing our capital very, very directly and I'd say quite actively. And that's allowed us to return any surplus to shareholders. And we said, especially given where our stock price is, which is not as high as we think it should be, we will buy back as many shares as we can with surplus capital. That's what we're doing. If we keep on performing, of course, we can keep on buying back shares.
Yeah, I think earlier in the year you described the stock price performance as, and I quote, crap. So you're still not happy with it? No,
of course not. It's less crap than it was, but it's, we have a long way to go. And yeah, of course, we have to ask the question, why? It certainly isn't that we're not performing well. So the performance is, we can do better. I will always recognize that we can do better, and we are doing better. But I think we're operating in a somewhat difficult environment. And I think we need to be clear about just how differentiated Standard Chartered is. And at the end of the day, we serve multinational corporations on their cross-border needs, and we serve affluent individuals. We do that extremely well. We got a fully scaled and quite a substantial position across Asia, Middle East, and Africa, but also with multinational corporations coming out of the Americas and Europe. That's what we do. We're doing it well. It's generating good returns. We keep on going. So
do you have potentially a new target figure for the buyback target?
We haven't revised our target. We just set the $5 billion target in February. We're not going to fine-tune this thing every 3-6 months. What we said was we'll do in excess of $5 billion, and we're on track to achieve that. And as I said, we'll keep on going if we can generate the strong performance.
OK. I want to ask how your Fit for Growth plan's going. So this is your plan to cut costs by $1.5 billion over the next 3 years. Yeah. Are you seeing much wage inflation, for example?
We have. We obviously had a big spike in wage inflation last year. This year is much more subdued, and that obviously is getting back down to normal. The Fit for Growth really is a transformation program. So we've had cost-cutting programs pretty much my whole time at Standard Chartered, and we'll continue to get more efficient. We're trying to do this one a bit different, though, which is actually quite a bit differently, which is to look at every single one of our processes and say, how do we simplify this? How do we replace manual processes with digital processes, automation, simplification, et cetera? How do we make it an easier place to get things done for ourselves, for our colleagues, for clients? That requires investment. So in addition to saving $1.5 billion a year, we said we're going to spend $1.5 billion up front to achieve that. Everything is on track. We've got over 200 initiatives that we're pursuing. Each one is quite small. I mean, these aren't like big marquee projects, but collectively it makes a big difference.
OK. Let's delve into these pre-tax profits. A rise driven by your wealth business. Where are the biggest inflows geographically?
The biggest inflows for us are everything international. So what we call international banking. A big chunk from mainland China, investing in Hong Kong, investing in Singapore, to a lesser extent investing in Dubai, but that's happening. Global Indians, so the Indian wealthy population obviously growing very quickly. Again, across Dubai, Singapore, Hong Kong are 3 big wealth hubs, in addition to Jersey. But also the rest of ASEAN. I mean, the wonderful thing about our footprint is that there's a rising upper middle class. They're saving, in many cases, for the first time in their families' histories. And people who had some wealth before, of course, are becoming wealthier as these economies grow. And it just is playing right into our strengths.
I do want to come back to the China outlook, but on wealth, could you hire more wealth managers?
We are hiring more wealth managers. We've grown the number of wealth managers by about 9%, per year for the past 3 years, and we'll keep on going. We're focusing on the full spectrum from the ultra high net worth, so private banking, through to our real sweet spot, which is the mass affluent. So people that have material savings but aren't in the family office zone. And we're very good at helping lift those individuals or families out of the states that they've been in, which have been typically not accumulating savings, into investing substantial amounts.
And you've got a target of over $80 billion of net new money for 2024 to 2026. Are you confident now that you're going to hit or beat that target?
I mean, we're very much on track. So the guidance that we gave just 6 months ago, we've already surpassed that in terms of the early stages. It's been a good market. It's not been a perfect market. Obviously, we've had challenges in some of the equity markets around the world, and some questions about how the tech sector will perform, et cetera. But against the backdrop of a market which is, I'd say, neutral in terms of attractiveness, we're outperforming. So assuming the market stays neutral, I think we'll do very, very well. If we have a very, very difficult time in the market, it gets tough for a short period of time. But this is a long-term story. And this, we've been growing it at 9-10% for 10 years. And we cover that, and we'll cover that in our earnings presentation in just a bit, that this is a long-term secular growth story. It'll be volatile from quarter to quarter, maybe even from year to year. But the trajectory is very clear, and we're perfectly positioned for it.
You mentioned China, Hong Kong. I wonder whether you're still staying on the sidelines when it comes to Hong Kong mortgages.
So two stories about Hong Kong mortgages. First is they're very safe. We've got very low loan to value in aggregate, so we've got zero concerns. Even with a somewhat soft residential property market in Hong Kong, and it is a little bit soft, we've got no concerns about losses. But the market is extremely competitive, and Hong Kong mortgages tend to be the thing that soaks up surplus deposits. And there is a surplus of deposits in Hong Kong right now. So the margins are actually unattractive in Hong Kong. Our market share we've taken it down deliberately. But we're not concerned about that because the franchise for our customers in Hong Kong is still extremely strong. And we're able to service any customer that looks at mortgages as part of a broader relationship. So we continue to be active, just not as active as we have been in the past.
OK, we were talking about the stock price. What do you think it's going to take for it to be properly re-rated by the market?
Well, that's a big question. And the first story is for us is to keep on performing. So this performance today will add to that momentum. It's been, if you can draw a line through the interest rate effect of the COVID period, it's been a good, steady performance story for 5 years. But obviously, we have to demonstrate to the market that it's sustainable in this kind of a rate environment. Everyone expects rates to come down, probably starting in September. That will present some sort of an interest rate headwind. But we've still guided to increasing net interest income because we think we can offset the rate effect with volume growth and with mix shifts in our portfolio. So I think, but we need to demonstrate that. Second, I think that the world will need to recognize that we're not a proxy for Chinese GDP. We are a proxy for the degree to which China opens up, to some degree. We've got a super business in China. We're helping connect China to the rest of Asia, to the Middle East, Africa, to the rest of the world, and vice versa. Those trade links and investment links haven't gone away. In fact, they're extremely robust. So, but the market still sees China as an economic weak spot and is concerned that could spill over to our earnings. Empirically, we're showing it doesn't. So I'm very hopeful that as we just stick to our knitting, focus on those things where we really make a difference, we'll perform, we'll generate the results, share price will follow.
So you're not a proxy for China GDP.
We're not.
You're London listed, but the business isn't predominantly about London. I do wonder whether you expect a lift to the valuation because of the boost from the lack of political uncertainty now, given Labour's electoral win.
Well, it's certainly good to have a stable government in the UK. I think they've, as the Chancellor has made clear, we're working through some challenges, fiscal and otherwise. But certainly all of the rhetoric to this point from this Labour government has been very supportive of a stable business environment, which is not to say that there's going to be giveaways or handouts. Last government passed through a competitiveness objective, a secondary objective for the regulators, to focus not just on financial stability, but also on creating a competitive financial sector. These things are working through the system. And thankfully, it's a highly sophisticated regulatory environment here. Stable politically, that's a good environment for us to have a headquarters.
OK, good. And just finally, Bill, you're in your 10th year now as CEO. You talk about the long term.
Yeah.
You've said before you've got no plans of going anywhere. And I wonder whether it's your intention to see through this cost-cutting and growth plan until at least their completion in 2026.
Yeah, I'd like to. But you know how these things go. You live it from day to day. But my certainly all the actions I'm taking today are with a medium long-term view. I've always tried to be that way. And we've got a fantastic team at Standard Chartered with a couple of new members and a couple of people that have been with us for a long time. So I'm quite sure that what we build in the coming years, we can continue for some time to come. But yeah, my objective is to see if we can deliver the strategy.
Well, I hope to be discussing your earnings with you for many years to come. Bill Winters, CEO Standard Chartered, we thank you for joining us on that exclusive interview. Let's go to some other stories making news this morning now. McDonald's has shrugged off the burger chain's first sales drop in 4 years, pledging to launch new promotions. Second quarter comparable sales fell 1% year-on-year, with the CEO Ian Borden warning of further weakness as cash-strapped consumers curb spending. But investors retained their appetites, with shares posting their best daily gain since 2022. In US politics, North Carolina Governor Roy Cooper has withdrawn from the race to become Kamala Harris's running mate. The Democrat is worried that his Republican lieutenant governor could try to assume control if he left the state. Cooper said in a statement that it's not the right time for him to be on the national ticket. Meanwhile, Donald Trump said that he expects to eventually debate Kamala Harris. He had previously declined to commit to appear at a scheduled face-off. So those are some of our top stories this morning. It's a busy day ahead on the docket. At 10 a.m. UK time, as I say, we've got Euro area GDP coming up. At 1 p.m. UK time, we get German CPI data for July. At 3 p.m. UK time, it's the US JOLTS data and the Conference Board consumer confidence numbers. And aftermarket will have earnings from L'Oreal and Airbus, as well as Microsoft. So plenty to watch later. But coming up on the programme, Britain's new Chancellor, Rachel Reeves, accuses the previous government of racking up a £22 billion hole in the public finances. We'll get the details with our Europe economist, Anna Andrade, next. This is Bloomberg.
We have inherited a projected overspend of £22 billion. If left unaddressed, it would mean a 25% increase in the budget deficit this year. I am announcing today that I will hold a budget on October the 30th, alongside a full economic and fiscal forecast from the Office for Budget Responsibility.
So that was Britain's new Chancellor, Rachel Reeves, in Parliament yesterday, accusing the previous Conservative government of running up a £22 billion fiscal black hole. She hinted that she may have to raise taxes to help balance the books. And so for analysis, we're joined now by Anna Andrade, our Europe economist here at Bloomberg Economics. Anna, before we get to what she's going to do about it, let's start with Reeves's audit of the public spending. Was any of this surprising to you?
Hi, good morning. Yeah, I would actually say it was a little bit surprising in the sense that the problem is a little bit bigger than we thought. Taxes are going to rise and we'll need to issue fresh borrowing. And the reason why it was a little bit more surprising is that going into the audit, we had sort of written, or we were sort of expecting that a 20 billion fiscal hole would be found in public finances. But this number that we had quoted related to sort of the medium to long-term pressures on public spending due to the unfunded and protected departments. Now, what we found out yesterday was that actually for this budget alone, there's a 20 billion shortfall. Now, I think it's important to say two things. The first one is that it's not only due to sort of this 20 billion number is not only due to unfunded spending commitments. Part of it does, half of it does generally seem to be that there are some departments that are struggling. They need sort of a cash injection right away, especially the Home Office and the Transport Department. But another half of the 20 billion is also a political choice from Labour. It wanted to meet the pay demands of public sector workers, and that also is reflected in the 20 billion. And then just a second thing to note is that there's still a bit of uncertainty about this 20 billion because the document that was published by the Treasury did say that until the autumn statement, the government would try to find further savings within existing budgets to sort of make up for that hole. So there's still a bit of uncertainty there, and it's possible that this is an upper estimate.
OK, that's really interesting. So you're kind of agreeing with the Conservative charge that this isn't just an economic exercise, but a political one. The other charge from the opposition is that tax rises now look likely, that she's kind of abandoning growth as a solution to the fiscal black hole in favour of austerity and tax hikes. What do you expect is coming?
I mean, tax hikes obviously drag on the economy. They will probably drag a little bit less if they are targeted to wealth, to pensions, and to businesses. Some sort of business, the ones that they are considering. They can drag a little bit less than the traditional tax hikes, for instance, on income. But at the same time, you'll also be going to have increased public spending. So actually, in the short term, there's not a big impact on the economy. But now I do think that there's a more fundamental question about which fiscal space does the current government has to invest, because we didn't talk about that yesterday, or Reeves didn't talk about that yesterday, but public investment is also set to fall. And, to sort of, in order to change the growth prospects of the economy, you kind of need to add more investment. And that's something that in the current fiscal rules, there's just no fiscal space to do that. So I think at some point we're going to have a conversation about whether the current fiscal rules are sort of the right ones if we want to stimulate growth.
And indeed, perhaps we'll have that on October the 30th, the date Reeves announced for the next budget. But I wonder, apart from tax rises and spending cuts, what about the question of borrowing? Can we expect more of that in the near term? And how do you reckon the BOE will think about that?
I think yes. Again, as I said earlier, I think the number we got yesterday is that there was going to be between 16 and 17 billion of fresh borrowing this year. It's possible that that number comes down until the autumn statement. I think for the BOE, I think there's two reasons why it wouldn't be too concerned about the news yesterday. The first one is that actually even this 16 billion in extra borrowing, they're unlikely to change much in the short term to the economy. So they will probably lift GDP by 0.3%. It's what we're estimating, and inflation by just 0.1%. So it's not much for the BOE to be concerned. And fundamentally, what the BOE is sort of more concerned about is sort of the medium-term impacts on inflation. And there we sort of heard from Rachel Reeves, and I think it's widely expected that she's going to try to make up for that extra borrowing with tax hikes. That's also what we're going to hear probably in the autumn statement. So that sort of corrective action means that the inflationary consequences won't be big.
And just while I've got you, let's look ahead to that Bank of England decision on Thursday. Looks like it's going to be on a knife edge. Looks like it's going to be an incredibly divided monetary policy committee. Where are you sat for whether we get a cut or not?
Yeah, so we have been looking for a cut in the August meeting for some time. I mean, we know that services inflation has been probably a little bit sticky than many in the MPC would hope. But if you look at the progress that has been made on inflation since the start of the year, and you've also seen the jobs market cooling, then I think there's enough not to sort of start a very fast and aggressive easing cycle, but to sort of, just cut once and then maybe gradually. But starting in August is what we're expecting.
OK, Bloomberg's Anna Andrade, our Europe economist. We thank you for that analysis of Reeves' statement yesterday and the preview of the BOE decision on Thursday. We've got plenty more coming up on the programme, so do stay with us. This is Bloomberg.
There is a lot of new stuff to build. And I think even if the progress on the foundation models kind of stopped now, which I don't think it will, I think we'd have like 5 years of product innovation for the industry to basically figure out how to most effectively use all the stuff that's gotten built so far. But I actually just think the kind of foundation models and the progress on the fundamental research is accelerating. So that it's a pretty wild time.
So that was the CEO of Meta, Mark Zuckerberg, speaking to the CEO of NVIDIA, Jensen Huang, in a fireside chat. Of course, we're looking ahead to all of those earnings that we're expecting this week from Meta, from Microsoft, from Apple, from Amazon, together worth a combined $10 trillion. So this week, the biggest week for earnings season, and we'll have all of coverage on Bloomberg for you of that. Meanwhile, we've got the central bank decisions coming out of the BOJ its two-day decision already underway. We have the Fed and the Bank of England as well. But if we flip the board, you can see how much volatility there is around this BOJ decision when it comes to the yen. Traders braced for big yen moves as we look ahead to the potential hike and an announcement on bond buying. If we flip over as well to the US politics, we've had developments there as well, bubbling away in the background. You can see the race for Kamala Harris's running mate is narrowing, and in the lead at the moment, according to the current betting odds, is Mark Kelly, but you've got Tim Walz and Josh Shapiro behind him. We also have the news that Kamala Harris has raised $200 million since entering the race for the White House, and this as she hones in on these running mates to join her. But we also have lots more on the docket for today. We have the multinational beverage company Diageo expected to release its earnings in just the next few minutes. We'll be speaking to the CEO Deborah Crew at 8 a.m. on the opening trade. And that does it for Daybreak Europe. Thanks for joining me. The opening trade is up next. This is Bloomberg.